You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music means we're back. Yep, it's Thursday. It is noon Central. It is 1 p.m. Eastern. It is time for the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fun network. Glad so many of you are enjoying our content throughout the week. No live stuff last couple of days, just having challenges getting guests through with all the interviews and everything else and all the things going on back east, weather-related. Still dealing with a lot of fallout there. But, of course, you got your shows. Nonetheless, you got Advisor's Option on Tuesday on the old network, and of course, yesterday you got your OB and your OPR. So a lot of fun stuff hitting the network, pretty much multiple shows a day. If you're not subscribed to the full network, listeners, A, what are you doing? You're missing out on a bunch of stuff. Get over there wherever you're listening to this and subscribe to the full network. And B, if you like what you hear, leave a review so others can continue to discover this options fire hose that is the network. And keep those questions and comments coming. We do love to hear from you guys. And joining me on the program today, first, it's quiet out there. Some may say it's tranquil, perhaps even idyllic. Yes, it is St. Charles, Illinois, where we are joined once again by Uncle Mike TOSAW from the appropriately named St. Charles Wealth Management. Uncle Mike, welcome back to the program on this kind of weird mixed Thursday, sir.
Weird mix kind of describes 2020, from what I could tell.
Yeah.
Great to be here as always.
You could probably put both of those adjectives together, as well as many more, to describe the year that has been. Thinking back to January, everyone was so excited. Not just a new year, but a new decade. It held so much promise. Everyone's like, wow, a new decade. Here we go. We're doing cool stuff, kicking off new things. Look at the Roaring 20s 100 years ago. Those were so great. And then, so far, we had about a week or two of optimism. And then it kind of all just rolled off a cliff from there. 2020s. Yeah. All right. Also joining us, you know, he's a source of optimism whenever we bring him on the show. Just nothing but rays of sunshine. He is the greasiest of meatballs, soon to be perhaps the cooked chili, the smoked brisket. We shall find out. Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital, by way someday soon of Austin. Mr. Meatball, welcome back to the program, sir.
Yeah, it's good to be here. It's an exciting day for the markets. It's an exciting day to be alive. Lots of little news out there that's creating some funness, and obviously the most funness of all funness is the option block.
Ah, yes, the funness. The funness is back. So let's get to it, listeners. Let's kick off the mail block. Or that'd be the end of the show. Let's kick off the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the Trading Block. This is where we begin our journey looking at what's trading, what's lighting it up in the old markets. As I alluded to Uncle Mike, kind of a weird, mixed session here towards the latter portion of the week. Most of the rest of the week, it was rally-ho mode. Yesterday, firmly in the rally-ho seat on the behalf of, vaccine optimism, disease, coronavirus-based optimism. Rallying hard on the day when Biden announced his VP pick, even though a lot of people thought she wasn't really very pro-market, yet that didn't seem to really weigh on the markets at all yesterday. Huge rally. Today, taking perhaps a bit of a well-deserved breather, a bit of a cautious step forward. The markets, most of the major indices, pretty much mixed on the day. Dow, a.k.a. the old world economy, even though it's going harder and harder to make those distinctions the way these indexes have kind of blurred the lines a little bit. But looking at the old school lens, it's the old world economy. It's off about a tenth of a point, a little more than that, a tenth of a percentage point, I should say. S&P up about a tenth of a percentage point, so both of them moving in lockstep in opposite directions. And then we got NASDAQ once again leading the charge, this time to the upside, up over 3/4 of a point, up about 0.86% out there. And, of course, we got our old friend, the Russell 2000, at least through the IWM lens. Actually a laggard today, only up about 0.25% out there. Usually, most days, it's moving and shaking more. If you want to hear more about all things small cap, of course, stay tuned to TWIFO coming up after this show. Get into that. Going to have some great guests joining us to break down what's going on in the world of futures, options across a broad spectrum of products. Right now, gold's up, but it's still shy of that 2,000 level again, so it broke back below that. And crude's still up, even though it's down on the day today. Still up north of that 40 handle, about 42.25. And, of course, our old friend VIX Cash is effectively unched from our last show. It's down about 1/4. So it was at about 21.5 kicking off the show here, which puts it pretty much almost exactly where it was this time last year. Our old friend VVIX actually up a bit. We have seen some vol since our last show. It's up to about 113.5 or so to kick off the show. That puts it up a little over 3 handles, about 3.5 handles. And VXX still down to the dark side, threatening that 25 handle yet again, 25.25. Down about 2/3 of a point out there. And if you're wondering, is this my time? A lot of you have been asking us about these lofty valuations. This kind of, I've often joked that the market has been whistling past the graveyard for some time. If you're wondering, is this my time to get out? Well, maybe this will be the iron in your fire to drive you out. Of course, everyone's favorite. Depends, I guess, which side of the aisle you fall on. If you're on the right, then he's your favorite boogeyman of all time. If you're on the left, maybe you like him. If you're from a financial markets perspective, maybe you love him or hate him. Of course, this is George Soros. It is amazing to see how this guy's just become this specter looming over everything, this boogeyman. Everyone thinks he has his tendrils and everything out there. Well, he's out. If you're wondering what's his thought on this market, he is out. He said this market, which he no longer participates in, he says, is sustained by the expectation of more fiscal stimulus along with the hopes that Trump will announce a vaccine before November. Obviously, take his political views with a little bit of a grain of salt. You know what axes he has to grind there. People keep talking about, whenever they mention Soros, they say, oh, he made a killing shorting the pound. He did. That was a long time ago. He also, maybe less heralded, but one we remember more, is he probably had one of the worst timing with equity bubbles, maybe ever. Except maybe the one guy or maybe came in and stepped in and bought all the tulips right before the tulip bubble crashed. Soros famously held off on buying into the tech bubble until about March of 2000. And then he not big fanfare. Hey, we're getting in. My funds are getting in. And guess what happened in March of 2000? It was probably one of the worst timed buy-in decisions in history. So maybe take his decision here with a grain of salt. I know it's kind of hard to look at Soros outside of the political lens. Everyone has these political viewpoints of him these days. But that said, if you needed maybe irons to stay in the fire or get the heck out of the fire, Soros is out. Make of it what you will. And if that's not enough for you, of course, I mentioned we got the VP nominee. Kind of a weird reaction to her. Kamala Harris, not really widely viewed as some sort of really pro-market type. Of course, these days, looking at progressives on the Democrat ticket, you don't expect to see a lot of pro-markets nominees anyway. So maybe she's the best of a bad field, at least when it comes to looking at from a pure markets lens out there. But the market rallied on her, so maybe that's something. But that's not enough of a sign that maybe you think things are better. Well, then AMC agrees with you. They're coming back in a week, exactly a week. They're reopening their theaters August 20th to coincide with their 100th year of operations. And they're going to charge the 1920 price of 15 cents a ticket. So if you needed some incentive to go back and sit in a crowded theater with other people in the midst of a pandemic, Maybe 15 cents will do it. So a lot to unpack there. Let's go the opposite of the way we came. Let's start with Mr. Meatball. Mr. Meatball, we had a weird week. We got a VP pick. The market rallies. We got theaters coming back. We got SOROS getting the heck out of Dodge. What's catching your eye out there today, sir? In the midst of, what did you call it, the funness?
You know, it's amazing how many of these big fund managers missed the boat in 2000, right? He's not the only one that bought really poorly timed. Didn't Druckenmiller as well miss pretty darn badly on the tech bubble as well, and a few other people. So, it's very difficult, even for smart people to get things exactly right. I don't entirely disagree with some of his logic. We now have a situation where Apple is going to the bond market to fund a giant amount of stock buybacks. And you got to ask yourself I think that's the kind of the more interesting question is, all right, what implications does that really mean for the stock market that, that type of behavior is going on in the bond market where, companies used to loathe going to the bond market. And Daily, my dog, does too. She loathes the bond market. And so, that's interesting. And then Kamala Harris, which means creator of wealth in Indian. I was reading in the Wall Street Journal. So she is of Jamaican and Indian descent. She is half Indian.
Oh, that's why we rally. She's going to create wealth for all of us. Now I understand.
Yeah, Kamala means creator of wealth in Indian. And my understanding is it's a synonym for Lakshmi. That's what they were saying in the Wall Street Journal. So I can tell you this. If you're making trades for or against the market because of a candidate for office, you are making a bad decision. I think no matter what your political leanings are, making those types of decisions will cost you a lot of money long term. I've never met anybody that made a good investment decision because of their political leanings, and that continues to grow. I mean, I think we've had guests on from both sides of the aisle, and all we ever happen, we've had liberals and conservatives over the last 40, 50 years, and the market has just essentially gone up. So that's just something to be aware of, especially with interest rates as low as they are. So that's kind of what I'm paying attention to. I know we'll talk about this more in detail, but past guest Scott Nations, his Nation Share Ball Q finally looks like it's going to get a list. So little congrats to Scott. He's a nice guy, and I'm happy to see something come of his thoughts. And that's we continue to see silver and gold off to the races, and Bitcoin, so and Ethereum. So the weak dollar trade continues to be a crowded trade.
Yeah, Mark, maybe your brand of humor is not resonating with our audience today because they're not getting it. We have, looks like regular listener here, Studini. I've seen him in there before. He's not feeling it, Mark. He says, funness is not a word. So he's very offended at your choice of grammar. By the way, that's the joke, Studini. It's not a word, of course. That's what makes it funny. But hey, Mr. Meatball, he's not feeling your grammar today.
You told him the internet wasn't a word 20 years ago, and now it is. So, TikTok wasn't a word. So if I say it's a word, it's a GD word, all right? You back off, you.
If Trump has his way, TikTok may not be a word again. But yeah, sometimes you like to play with a little bit of the grammar and the vernacular out there. At least the Meatball does. I've been known to jump into that arena myself, which is what makes funness so fun, because it's not a word. We agree with you. All right, so that's the joke. Just when you have to say the joke, it loses some of the fun. But c'est la vie. Let's keep on rolling. Mr. Uncle Mike, sir, a lot to unpack this week for you as well. What is on your radar? What is lighting up your tape today?
Well, first off, I think we have some fake news out there, Mark. And all of our 80s WWF faithful will agree with me on this. Because I don't know if the fake news is from the mainstream media, both Fox and CNN. I'm not trying to be political here, or whether it was from the WWF website or the WWE website. But I thought Kamala, the Ugandan giant, I thought he died a few years ago, the one that fought Hulk Hogan back in the old days. But now he's a vice president nominee. What's going on?
Amazing how that works from the WWE to the White House. Has there been a greater American story, sir?
I don't think he's eligible, though, because he's from Uganda, isn't he? But he's not even alive.
He's from Uganda and also dead, Mark? Both of which would probably disqualify him. The latter probably more so.
I actually think he passed away almost the same day as Kamala became VP, and it created all kinds of confusion in the Twitter sphere.
Well, here's where the confusion even gets greater, because if you're dead, you're eligible in Chicago, though, aren't you?
Oh! Yeah. How about Madigan getting hit with you know what? We don't want to go into Illinois politics. So
no, we don't.
We do not bring up Madigan. That's a rabbit hole we cannot recover from, sir.
Yeah, no, there's no way.
Good point. All right. But anyway, shout out to all my WWE faithful out there. But anyway, we touched the all-time highs yesterday, or we looked like we may close it or come close to them, and couldn't quite pull the trigger yesterday. And so we might make another run at today. So I think right now in the marketplace, that's the next big barrier for more wealth going or more resistance going forward with the S&P 500 at this point. Silver took a big hit earlier this week, but it's recovering very nicely today. So it's a lot of volatility going on in the silver space at this point in time. And you could say rightfully so with all the everything that's happening in our world these days. Type of another stimulus of some sort. Some people are calling for greater unemployment benefits, which from what Trump did in the executive order about a week ago, I mean, I don't know if this is going to go through or not. Another $300 a week as opposed to the previous $600, with the expectation that individual states are going to pay the $400. There's continued confusion right now over whether the payroll tax deferral is going to go into effect, whether it's just going to be deferred, whether it's going to be forgiven, or how that's going to work in general. So still not a lot of clarity with that. And then, over the past weekend, when the president said that he was looking to possibly just abolish the payroll tax, what does that mean? Does that mean he's going to get rid of Social Security? Does that mean that he's just going to fund it other ways? Just a lot of confusion that's happening right now on both sides of the aisle, quite frankly. With the VP nominee that we have now, we have that into play, and I think it's going to be a very interesting debate season coming up. And I just want to reiterate what Mark was saying when he was talking about how you really shouldn't place investments based upon who's in office. I went through this a couple of weeks ago on the strategy block, in that the market has done well and the market has done poorly, regardless of who's in office. But for the most part, like Mark said, over the long term, the market's gone up, and there's little tidbits or little spots in history to where you can say, oh, those stinking Democrats, they made the market go down, or oh, those stinking Republicans, they made the market go down. But ultimately, they've both played a role in this. And like I've said before as well, America is much bigger than one office. We're the greatest country in the world, and we have checks and balances, and we have three branches of government to balance things regardless of who's in the White House. So we have all those things going on, and going into election season, I think this is going to be very interesting to see just how markets react, because I do think markets will react in ways depending on who's doing better or who's doing worse in the polls, and not necessarily the market as a whole, but it's sometimes the market as a whole. But I think that just various sectors of the market could react depending on who is doing better or who is doing worse within the polls. And to add to it, the Big Ten, when they announced that they weren't going to be having college football for sure on Monday or the other day, that's when we had a sharp drop in the market right at that time. People don't think it's as big of a deal as I do, but we're going to be hurting a lot of economies throughout the country if we do not have big-time college football. Now, as sad as it is that Division II and Division III football are done, that's really not going to have quite as much of an economic impact on things. But towns like Columbus, Ohio, towns like Champaign, Illinois, towns like Bloomington, Indiana, and all the Big Ten towns that are very dependent upon revenue coming into their towns when college football comes to town. They're going to be hurt pretty bad. The football stadium for the University of Nebraska is actually the third biggest city in the state of Nebraska. And when you're taking that away, that's going to hurt.
I do want to make one correction there, Mike. They have not had big-time college football in Champaign, Illinois, or Bloomington, Indiana in maybe 30, 40 years.
Uh-oh. Fighting words.
Okay, you got me there.
Shots fired. Shots fired.
Our producer is from U of I. You may accidentally be knocked off the program somehow throughout the show. I'm just laying that out there for you.
But yeah, those are the things that are going on. And as we continue to delve into this program, we're delving through chaos, as we do in all programs these days, it seems.
Yeah, it's kind of hard to have a show that isn't somehow delving through chaos. That's another good title for the show, Delving Through Chaos, as the funness abounds out here. Let's see what kind of funness is hitting the markets here. VIX doing decent paper as of a few minutes ago. The ADV is about a little over 300K right now, 319, so it's gotten even lighter since our last show. So it is threatening that 300K level, which ain't looking good for volume-wise. Of course, this is that time of year when you'd expect that, but this is, of course, not a normal year. So all bets are off when it comes to pretty much anything in the market right now. A VIX at about 176,000 contracts as of a few minutes ago, so decent paper. Looks like it may beat that ADV today if we stay on this pace here. SPY at about exactly 1.75 million contracts. The ADV, 3.61 million out there. The S, 391,000 contracts. That's pretty anemic. That's also reflected in the ADV. It's threatening 900K to the dark side now. It's at 902 right now. So the S, well shy of 1 million contracts a day and threatening to go lower. The Q's, 540,000. The ADV, 1.05 million out there right now. And IWM, as of a few minutes ago, it's got about 151,000. The ADV is 524,000. It's pretty light in IWM as well. Let's move on out to the top 10. Decent paper in the single names out there. Cost you $1.54 to get into the top 10. 154,000, of course. They get you all the way across the street to Boeing here. Number 9, Micron, 184,000. Number 8, Space. Good old SPCE. Yeah, easier for me to say. SPCE. Haven't seen them in the top 10 in some time. That is, of course, Virgin Galactic out there. That's trading right now, 19.05, up 88 cents. So a good little run for them, up nearly 5%. That's good enough for 185,000. Number 8 on our list. Number 7, Microsoft, 203,000. Number 6, Facebook, 207,000. Number 5, Boeing Symbol Buddy, Bank of America, 215,000. So separate again today. A rare divergence for the two of them. Number 4, AMD. It's always in the top 10 these days. There it's number 4, 229,000. Number 3, cover your ears, Uncle Mike. It is Cisco, your lifelong nemesis, 350,000 contracts. Then we jump up quite a bit to number 2 here. Good old Tesla, 622,000 contracts on the tape for Tesla right now. Then, the top 2 names the last few episodes here have just been blowing the doors off, and Tesla doing the exact up 73.5 handles. Both Tesla and Apple having announced stock splits. Obviously, that's been good for their underlying. They've been on the rampage, up 71, almost 72 handles, up nearly 5% again today. Tesla at 1626.5. It's hard to even say that with a straight face, yet there it is, 622,000 contracts on the tape, 71% of that coming on the call side. But you know what? Number 1 beats both of those. Apple, 890,000 contracts out there. It is so funny how you just have to announce a stock split, and this prospect of the stock getting cheaper makes people really excited and want to buy it and make it more expensive. It's one of those weird, counterintuitive market trends out there. Yet Apple and Tesla bearing this trend out yet again. Apple up 9 1/3, or a little over 2% to 461.40 or so out there. It's good for 890,000 contracts. 74% of that coming on the call side of the ledger. So Apple's almost number 1. It's tied with Microsoft for number 2, actually, in terms of bias paper. Number 1, actually, good old Virgin Galactic, 78% of that, 185,000 contracts. Coming on the call side of the ledger. Let's pop in really quickly to see what's popping off here from an earnings perspective. Remember, you can get all these reports for yourself in your hot little hands completely for free. TheOptionsInsider.com is the place to go. Click on that Options News and articles tab. Of course, you can click around there while you're there. Click on the various shows. Check out our live schedule. Check out some of our social media and tweets on there. All sorts of fun stuff to do in between episodes over there. TheOptionsInsider.com. A lot of you come for the network, but hey, we got a whole website there you can check out as well. Monday, we had Marriott and Canopy Growth. Wednesday, that's why they're moving, of course. Good old Cisco and Lyft. Today we got NetEase, which is the Chinese video game name, and then we got AMAT after the bell, and then tomorrow DraftKings. Let's see, we got some move results reports as of this morning. So hot off the presses, Cisco. They were reporting last night after the bell. They closed at 48.10 going into their announcement. They were pricing in 5.2%. And guess what, listeners? We talked about this trend of kind of underpricing vol and then under-delivering from a vol perspective this season. Well, Cisco bucking that trend. They're off, as of the time of this report, they were off 11.7%. So more than doubling their straddle. And let's see where they are right now, listeners. About 11.5% almost. So they have extended that to the dark side there. So Cisco blowing the doors off their straddle. One of the few names that has left premium buyers looking happy. Usually it's the opposite. I think as Matt termed it earlier this week on the advisor's option, this has been a bloody season for options and indeed premium buyers out there. Let's see if Lyft can keep the trend alive. Lyft had announced after the bell yesterday as well. They went into their earnings $30.52. They were pricing in 10.1%, so pretty rich. Probably a lot of that coming on the heels of what Uber just did. They obviously pricing in a little bit of juice for Lyft. And nope, right back to the same old script. They delivered 5.1%, so exactly half pretty much of their straddle. Let's see where they are right now, off 3.5%. So they've even come back more. So yet another example where premium buyers getting the short end of the stick. The last two cycles, if you had told me coming in, I've said this before, but if you told me if there are any couple of cycles, particularly last cycle, where you think you probably want to have a little bit of premium in your back pocket going to earnings season, it was probably the last one, and maybe this one. And yet, that has been one of the worst trades so far that we've seen. We got, let's see, AMAT after the bell today. So obviously we don't know their results, but we can look at what the report is pricing out here. 66.5 is where they were at the time of this report. They were pricing in $3.22. In the past, they moved $2.78, so a little bit rich on AMAT. Let's see what else we've got. Walmart was before the bell. Actually, it was next week on the 18th, so they have a little bit more time to go. They were at almost 132, but 131.90. They were pricing in 532, and in the past, they moved 544, so not much really of note there in Walmart. DraftKings, a name we haven't talked about before here. They're on the 14th, so tomorrow before the bell. Let's see, they were at 33.74 as of the time of this report, and 334 is what they're pricing in, and we don't even have past data for this name. It's so new. So, yeah, interesting stuff here. We don't know. This is our first real bit of analysis for DraftKings from an earnings perspective, so we'll see how they're doing. But so far, pricing in $3.34. If you want those names, let's do one more, because it's a big one. It's popping off next week. This is NVIDIA. That was the bellwether for many names on the mobile front with their mobile chips. Of course, on the crypto front for a while. Who knows what NVIDIA is the bellwether for now? Many things. But let's see. Coming into this report, it was at $457.61. They were pricing in $28.87, so pretty juicy. And looks pretty juicy compared to their past straddles as well. In the past, they've moved $25.89. So in regards to their previous earnings announcements and their earnings moves, this looking a little rich. Of course, if they play the same pattern everything else has this cycle, that's going to be a bloodbath for the people who buy that straddle. So that's just a handful of those. You can check out the earnings move results. And, of course, the earnings season. I don't even have time to get into that. We have the whole season broken down for you as well. I'm looking at it right now. A lot of red on that report, listeners. Check it out for yourselves over there, theoptionsinsider.com, courtesy of our friends over there in Orat's land. Meanwhile, it's time for us to keep on rolling. It's time to get weird. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Let's do it. Let's get weird. Let's get wild. Let's get odd. Let's kick things off, not just unleashing our Eye of Sauron. He'll come in a little bit. But let's go back to see what some of our Eye of Sauron found for us in the past. In this particular case, it's a pretty sizable one. We're going to go back to July 2nd in our old friend GM. I haven't talked about GM in a while, probably since this day here of July 2nd. It's not a usual name to pop up our unusual activity radar. We'll get to where GM is trading right now in a second, because it's a bit of a spoiler. But on July 2nd, we profiled what looked like a pretty sizable, pretty near-term risk reversal going up in the weeklies. In particular, it was the August, expiring on the 7th, so not even the traditional monthly August, 26.5, 25, what looked like a bullish risk reversal at the time, going up 70,000 times for the 25 puts, for $1.29. It was pretty much right on the bid, and 71,500 times, so a little bit more on the call side for $1.10, lifting the offer there. So it had all the hallmarks of your traditional bullish risk reversal, selling the put, buying the call, pretty tight one and a pretty near-term one. That made it interesting because you don't see these types of trades going up for this type of size this close to expiration. This one had a little bit over a month to go. Usually these types of size, they like to position a little bit more, a little bit further out. But this guy doing it for about a month and change here. As of the trade date, the stock closed at 25.25. So those 25 puts, that line in the sand was fairly aggressive. And they did it, they did it for about, looks like a 19-cent credit. They sold the puts for $1.29, bought the calls, as it seems, for $1.10. And so as this thing went on, they had to sweat it a little bit because the stock dropped during the time of this trade down to a low of a little bit shy of 23.5, 23.42. So this guy was wearing it for over $1, about $1.50 on those puts. So he probably was sweating this one. Maybe that kind of size, maybe he wanted to buy himself some GM because it was a pretty tight risk reversal as well, which made it kind of interesting from that perspective as well. Of course, these expired on the 7th. If you fast forward to the 7th, they were not open anymore. So this guy went and took this bad boy off. He did it on the 4th, so a few days before expiration. Looks like he did it buying back the calls. Selling out the calls for 16 cents and buying back the puts for 14 cents. Looks like he put it on for a 19-cent credit and took it off for a 2-cent credit. So you're talking about 21 cents for this guy about 70,000 times. So in the neighborhood of $1.5 million, it seems like. So he had to sweat for it. But it seems like he didn't want the stock after all. And, of course, he took it off. So interesting stuff. Mr. Meatball, an interesting one, a sizable one, a fairly near-term, fairly tight bullish risk reversal, which is kind of interesting in and of itself. Do you concur with this? Do you think maybe something else was afoot here, sir?
No, I mean, that's what it looks like, is a really near-dated bullish risk reversal.
You think our guy is sitting pretty to the tune of $1.5 million, sir?
He must be. I think it's probably against the stock position, obviously. But, yeah, I mean, that sounds like what he's trying to accomplish.
Sounds like he didn't want to get that stock after all. He must have been sweating a little bit. So he had to work for his $1.5 million, listeners. But we like to go back and check out how some of the sizable prints we look at, how they unfolded in the marketplace, at least just purely from the options lens. He probably has underlying or something else on against this, obviously, but from a purely options perspective. This trade seemed like it worked out. He took it off pretty deftly, too, and he was still able to get a little bit of a credit for this thing. Put it on for credit, take it off for credit. There are worse things in life. All right, let's move on to what our Eye of Sauron has in its crosshairs today. This one I don't believe we've had on the odd block. If we do, it's not ringing a bell with me. This is Glue Mobile, ticker symbol GLUE, G-L-U, not Gru from the Minions franchise, Despicable Me. That would be cool, but no, it's Glue. Ticker symbol GLUU, so they added a U over there. This is a mobile game developer out of San Fran. Expensive place to be a mobile game developer these days. Maybe you want to move, save some of those office costs. But Glue Mobile trading today $7.75, up about not even 20 cents, but about 2.25% out here. So this is your resident cheapie. If you want a cheap name here, listeners, let's see what this name has been up to. A year ago, it was trading $4.65, so it's had a nice run since then. Of course, it topped out right before all the madness at about $7.85. That was in late February. Then it sold off down to $3.98. Down in the teeth of the madness. Yeah, it looks like it hit 4.5. It closed at 4.5 on March 16th. Looks like intraday it may have gotten even lower. I thought 398 might have come early. I think 398 actually came in August because they were trading lower there. So they got down to about 4.5 in March of this year. And they pretty much rebounded right away. People realizing, I guess people want to play some mobile games. So they took off. And within, by early May, they were trading 10.25. So they rebounded nicely from 4.5 to 10.25. And they've been bouncing around this range ever since, up to 10.5, down to, 8.5, up to 10.5 again. And recently they're on the lower end of the spectrum again, obviously down to about 7.5. So they broke through that downside a little bit. That's where we find ourselves today in Glue Mobile. What did our Eye of Sauron find today? Let's see. Looks like someone maybe liking themselves a little bit of the old upside, a little bit of the old bubbly here in Glue. We saw the D's 11 calls, so pretty optimistic strike. I don't think in the the 52-week high is 1085, so they have not broken through the 11 handle yet. Someone says, you know what? This mobile love's going to continue through the end of the year. I want to get myself some of this upside to the tune of the D's 11s, 3,705 times for about 65 cents, 64.9. Their broker got them a little bit of a fractional savings on that 65-cent offer. These were 35 cents at 65. Go figure, this guy had to pretty much pay the offer to get almost 4,000 done in a name that the ADV, I'm guessing, is far less than that. Let's see. There are earnings between now and December. The next announcement, of course, is going to be in November 5th. So not a direct earnings play, but there are earnings baked into this one. So Mr. Meatball, this is kind of an old school odd block trade here. Someone coming in, a name that's had some volatility of late. By the way, this is an 81% IV listener, so this is not exactly cheap. And yet looking at this name and saying, I think the party's going to continue beyond its 52-week high. It's going to do it by the end of the year, and they're willing to pay some serious vol to do it. What are your thoughts on these 11 calls in everyone's favorite Glue Mobile, Mr. Meatball?
Well, I remember Glue Mobile because it was they had the Kim Kardashian game that absolutely blew up about 5 years
Of course you would remember and know that, sir.
Yes. Well, keeping up with the Kardashians, the game was an absolute winner. They make Deer Hunter, which I think you and Uncle Mike would like. And I think they've got some partnerships with Disney, which is why this one does well. It's interesting. Those are out of the money. They're clearly looking for, they're clearly looking for some real upside in this name. It's a pretty strong move. If they're right.
I'm guessing you probably prefer to sell these than buy these, sir.
I mean, I prefer not to do anything in front of earnings, but 81% vol is pretty darn juicy. And this is a wide market, so who knows what the actual trade was, but if they're right, they're going to be there. This is one to watch, because this is definitely like they have some sort of game-changing type of game-changing type of game that they're working on, and the stock's going to shoot higher, or it could be some sort of buyout play, but it's definitely one to watch.
All right, we're going to put it in our to-be-watched category. We'll be back between now and December, listening to see how this fellow fares in Glue Mobile. Maybe they have the license to the Greasy Meatball game, exclusive, and they're going to announce it tomorrow, hence this overwhelming love in the stock. Are you feeling this? You feeling this upside love, listeners? You like this 81% of vol, this beyond 52-week high here call play? You think you'd rather sell it? Would you rather just get the heck out of Dodge? What do you think about this one? Let us know as we move on to our final name here. I like having some more obscure names popping in on the odd block. I mean, GM, not exactly in there, but the other two, looking at it, our Eye of Sauron taking us out now to Bright House Financial Inc., ticker symbol BHF. This is one of the largest providers of annuities and life insurance in the U.S., trading 31.5 today, off about a quarter or not quite 1% out there. This is the name that's been all over the place over the last year. A year ago, it was trading 35.15, so a wee bit north of where it is right now. Topped out at 48.25 right before all this madness, listeners. That was in mid-February. Then it sold off hard down to an intraday low of 12.05. That's pretty rough. And then they kind of rebounded like a lot of names did pretty quickly up to 26.5 on March 26th, and then back down again to 20. They were kind of up and down. A lot of fits and starts like a lot of our other names did. It wasn't straight smooth sailing for them. It was up and down, up and down. Then they peaked again in the near term. I think you can guess when that peak came. This is something we've been talking about for a while here. A lot of these, this isn't that much smaller, but still they smaller names outside of compared to certainly to the $1 trillion FANG names. Outside of those, they're certainly smaller. but this is a $219 billion company, so not small, but still, compared to some of those other names, it's smaller. And those names have all been on the nothing but upswing. June 8th, though, was the peak for a lot of those names that we talked about, the smaller names, including this one. This one peaked at $38.56 on June 8th and has never really looked back. It sold off down to $25.33 in the subsequent weeks. So this one took a nice hit, over 10 handles, and then now it's kind of starting to fight its way back up to 31.5. So June 8th, that day I've talked about before with a lot of these smaller names, a pivotal date. It certainly seems to be the case for Bright House Financial as well. Let's see what our Eye of Sauron found out here. It looks like Mr. Meatball might be a little bit of the old put love. Maybe someone thinking or worried that this name isn't done testing its lows because it's Jan 2021, so this coming January here. The 30 puts going up 2,500 times for $4.40. It's another pretty wide market. There were 390 at 460. Looks like someone gobbled these bad boys up. If they sold them, they got a pretty darn good price for them. Let's see, 440, 2,500 times over there on the C2, actually. That's weird. You don't see C2 listed on this very often. There are earnings between now and January, of course. The next cycle is on November 2nd here. So, Mr. Meatball, this is an interesting one. They're paying a hefty premium. This is a 63% IV here, listeners, and $4.40 for the privilege of stopping themselves out at the 30 strike. Now, that's a pretty hefty tally. Obviously, someone, Mr. Meatball, may be thinking the worst is not over, perhaps, for Bright House. You think maybe the other side of this, you think maybe they have a great broker and they sold these bad boys to collect this line in the sand, sir?
That is some serious juice. If you're a holder of Bright House and you see this paper, you're probably not overly enthused. It doesn't seem to bode well. There clearly is somebody looking for some sort of outsized move in the name, because that's the only reason why a trade like that would go up. That is some juice there, and that is a hefty premium out for 5 months of protection.
Juicy McJuicerstein, I think, as you like to say here on the show. We're going to come back to this one, too. We're going to watch this one as well. So we got a couple names to watch towards the end of the year. We got Glue and Bright House. Meanwhile, it's time to watch what you guys have in store for us. It is time for your mail block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys know how to hit us up at Options, most of the major social media platforms. Questions at theoptionsinsider.com. That also works. Our website feedback form also works. Or if you want to get bumped to the top of the list, you go to our live chat. Studini taking advantage of that today. First he wasn't feeling what the Meatball was putting down there with the whole Fun-Ness. Now, Mr. Uncle Mike, he's not feeling what you were putting down earlier. Studini, maybe he's in a bad mood out there. We'll have to lift his spirits out here, because he's not buying what you were selling about the legendary WWE name Kamala. He says, you know what? He's not actually from Uganda. He's from Senatobia, Mississippi. So, Mr. Uncle Mike, put that in your pipe and smoke it, sir.
I mean, I'm at a loss. I mean, if you Google search Mean Gene Okerlund interviews with Kamala, the Ugandan giant, I mean, how can Kamala, the Ugandan giant, not be from Uganda? He didn't speak English. He would. No, I'm in disagreement on this one.
Uh-oh. I'm fighting words. We have to take issue with Studini here in our chat after the show. First the Fun-Ness. Now he's coming for the Ugandan giant. How could WWE possibly lie about someone's geographic point of origin? It doesn't make sense. When they say parts unknown for Demolition and for the Ultimate Warrior, it's because no one knows, because there's a mystery. They can't lie about such things. It's truth. WWE is real. Put that in your pipe and smoke it there. Studini. All right, let's move on. We got Scott Stewart. A lot of people were chiming in about this. We were talking about this on our Advisors Option program not too long ago about the whole Series 7. I think someone chimed in about this last show. Someone else, another Scott, chiming in about this time. We were talking about whether it's even got any utility for options traders or options-oriented advisors like Uncle Mike. Scott Stewart chiming in saying, I would submit it never had any. I passed my exam in 87 and learned absolutely nothing, in all caps, about trading from it. Yeah, that's the unfortunate side product to a lot of these quote-unquote trading certifications. I had the same response when I first took my SEBO exam years ago. I expected this thing to be all about how do you trade options and what's this strategy and how do you not effectively blow out. They didn't care about any of that. It's all about the rules and regulations. They want to make sure you don't violate any securities laws. And the Series 7 has a lot of that too. They have revised it, so there are some strategy questions now too. But oftentimes these regulators are more concerned with, do you know the rules and regulations and will you violate them, rather than do you actually know what you're supposed to be doing that this exam is supposedly certifying you for. So, Mr. Uncle Mike, I know you had a, shall we say, a dismissive view of the Series 7 in the past. Do you agree with Scott here that he learned absolutely nothing about trading from the Series 7, sir?
Well, when I took mine, I think I took mine, maybe in 04, 05, 03, 04, something like that. And roughly 50% of it did have to do with option trading. And it didn't necessarily talk about like managing risk or anything like that. It was like, what is a spread? If you bought a call and sold a call with these strikes, these expirations, what would that be called? And that's what a lot of it was, or roughly 50% of it. Because I remember when I started in this business with MetLife, I had already spent a couple of years just trading on my own, and then the Series 7 wasn't a needed thing. But if you wanted to take it, then you had to prove that you could pass the practice tests and things like that. And that took a lot of studying, but I already knew that. So it was like maybe a couple months into the job, I'm like, all right, I want to take it. They're like, are you crazy? I did really well on the practice test. So I just took it and I didn't really have to study for it that much at the time. And I think I got a really high grade on it. I think I got like above 90 in the options section of it. And then maybe like 50 and 60 everywhere else. But, it was just because of the options did have a lot of emphasis, at least in the era that I took it. And just for fun, I took a Series 7 test online maybe a couple years ago, or like a practice exam, because we were talking about doing some type of a joint business venture with a test studying company or something. And so I was just curious. And like I said, I dropped my Series 7 many years ago, but there was almost no options on it at all. And so for the Series 7, at least as of now, from the last time I took a practice test a couple of years ago, very minimal options on it. The other test that you take once you get a job within the industry, if you want to be an options supervisor at a firm, and this is what I had, and I had all these when I worked for Options Express, is the Series 4. Then you can technically be a crop, I believe is what the term is. And so I don't even know what that stands for anymore, but it's another way that you can legally supervise. And so there's a lot of things you can do, but ultimately I'm in agreement with you, Mark. Most of the time on those tests, it's just it's very legal, and it's not based upon the everyday use of what you do within the business, at least from my experience either. And, once again, I think that if you are going to be an advisor that does a lot with options, you kind of got to raise your eyebrow if you're looking to advise people on something that trades so frequently. If you're a self-directed broker, which they're kind of going the way of the floor trader these days, then Series 7 is fine because you're not soliciting trades. But as an advisor, it's kind of tough, I think. I'm very much of the school of thought that in order to be fair to the clients, regardless of what you do, I'm a fee-based guy.
It's like an Uncle Mike dominated strategy or a mail block here today. This is coming in regard to your strategy block, Mr. Uncle Mike. It comes from Trader J. Flaw. Oh, I think he wrote in he's JF Law. He's a lawyer. He's not a flaw, even though it says J. Flaw. All right. This is in regard to you. You had the Apple diagonal call spread you were talking about on the strategy block on Monday. He responded to that when he was listening on Monday, Uncle Mike. He said he sold the covered calls of the January 175 strike on LVGO. This is Livongo Health. And they're trading 121.74 right now. He said, I sold it before the merger when the stock was 148. So probably got some pretty decent juice on those Jan calls. He goes on to write, the stock probably would have been called away with blowout earnings. I bought the stock at 112, so he's still looking good. I'm watching covered call bleed slowly down, but also my stock purchase profits was holding and not closing out the whole position dumb. So he bought the stock at 112. The stock rallied to 148 before some merger talks. He sold a covered call against it, and now the stock is back down to about 122, a little bit shy of that, 121 and 3/4. Obviously, hindsight, bit of 2020 there. Trader J.F. Law, 79 to get your full handle out there. Obviously, that's one of those ones we talked about before with some other ones. Usually it's a long premium. We have to worry about getting out in a short amount of time. But in this case, yeah, it's a bit of a challenging one. I'm not sure. Mr. Uncle Mike, it's not exactly a diagonal. It's more of a straight-up covered call that he sold on this LONGO Health. But what do you have to say here for Trader J.F. Law 79 since he's asking you? Was he dumb?
No, you're not dumb. I mean, we're all typically the reason that you sell a covered call after a run up, or at least the reason that I ever would be because I'm looking to maybe get out of it in the near term and think it might stay up there for a little bit and maybe capitalize on some premium in the meantime. But you're smarter than if you would have just held the stock. So, I mean, that's one way of looking at it. So, no, I don't think it's necessarily dumb. But when doing that, I think that if you're still in the position right now, Mr. Law, what I would look at would be, or Mrs. Law, or whatever, would be, what is your current sentiment on the underlying? Are you currently bullish, bearish, or neutral? And then take a view on this and take a position that's appropriate. If you're currently bearish on it, you're just waiting until the covered call premium bleeds out to get out of it, then I don't think that's right. I think that if you are bullish, bearish, or neutral, adjust your position accordingly, dependent upon how you are today.
Yeah, your outlook may have certainly changed post this merger announcement, and the earnings wasn't a blowout, it sounds like. So your outlook may certainly have changed if you're trying to squeeze the last couple of cents out of that 175 call, which I'm guessing doesn't have a lot of juice on it. Probably at least take that off. Not a lot to cost you to buy that bad boy back, and maybe you could reconsider the underlying position going forward. Let's see. Speaking of going forward, Stadini, he's not feeling what we're putting down here. We were teasing him about the Kamala. He says, well, geez, it's just a nickname. It is WWE after all. Yes, we get that. We were joking with you, Stadini. By the way, my producer did track down what he's talking about here. His name was, I guess, Harris, and he was born in Senatobia, Mississippi. He grew up in Coldwater, Mississippi. Where he got in trouble and he got kicked out of town after his father was shot dead during a dice game. He left high school in ninth game, became a habitual burglar. So a rough run here for Kamala. He got kicked out of town later then by the police. He met a wrestler named Bobo Brazil who changed his life, brought him to the WWE, and he was on from there. So there we go. The life of the late Kamala here in WWE. And yes, it is just WWE after all, Stadini. So, yeah, we agree with you. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Who knew we had such a literal audience out there today? Mr. Meatball, let's start with you, sir. This is, of course, the segment where we go around the block, tell people what we're watching. Until the next time we can gather here together on this show on Monday, or maybe in your case tomorrow, for Volatility Views. What is on your radar these days, sir?
You know, I'm going to be watching the NASDAQ. It kind of got punched, and now it's been recovering the last couple days. So that is going to be kind of my main focus. I'm going to be watching, obviously, some economics. And then I'm going to wonder, you know, has our friend that's been complaining about Kamala, the Ugandan warrior, ever actually listened to this show before? Because none of these comments from us should come off as any type of surprise, and or, you know, he's basically railing against our MO as a operating podcast.
That name does look familiar. He has been in there before, so he clearly has listened to more than one episode of the Option Block. Maybe it's like a Rush Limbaugh thing. Maybe they hate listen, like the old data used to put out about Rush Limbaugh. People who leaned right listened for about 20 minutes. People who leaned left listened for like 50 minutes because they hated it so much. Maybe that's the case. Maybe he hate listens. Either way, he's been in there before. But maybe he doesn't get our unique brand of sarcasm here and irony and just jest on the Option Block. Mr. Uncle Mike, same question for you, sir. What are you watching for the rest of this week until we can gather here together on Monday, sir?
Well, the name Bobo Brazil struck a chord with me because I actually saw Bobo Brazil as a first grader. He came to the bar The Alamo in Aurora, Illinois, and my dad took me to the wrestling matches at the Alamo in Aurora, Illinois, back when I was in first grade. So I got to see Bobo Brazil, who not many people know this, is the master of the Cocoa Butt, back in 1983, live, ringside. But I digress. What I'm watching, seeing if we can get above the all-time highs. It's definitely going to be a point of resistance, and seeing where we're at with that. Of course, watching if we can get another stimulus deal, whether that happens or not. Watching to see if we still have payroll tax, and we got this whole COVID thing going on as well. So that is what I'm looking at.
Interesting. That music, of course, listeners, means we're done. I was not aware of this Bobo Brazil character, let alone that he had such an impact on a young Uncle Mike. There you go, Uncle Mike, checking out Bobo Brazil and a young, impressionable age. If you want to compare childhood WWE experiences as we wrap up the show, I went to one show when I was a kid. I'll just put this out there. Back in Connecticut. The main event, Andre the Giant versus the Ultimate Warrior. Yes, I saw those two fight for real as a kid, and it was amazing. For real in WWE quotes, of course. That was the highlight of my youthful WWE experience. It was a very WWE-heavy show. I blame our audience for dragging us down this crazy road. If you want more in your ear holes, probably less WWE talk coming up in a little bit, then stay tuned for TWIFO. We'll have some great guests joining me on that one to break down all the things going on in the world of futures options. Going to talk rates options, going to talk equities and volatility there, probably some energy. Who knows what else is going to make it on? FX, AGS, you never know. You got to tune into the show to find out. But before we go, let's go back around the horn. Let's start with Uncle Mike, who is probably wishing right now he saw Ultimate Warrior versus Andre the Giant live. Mr. Uncle Mike, sir, what is, if folks, actually, we know what you're watching. If folks are intrigued, they want to kick the tires, maybe they want to call you up to argue the geographic origins of famous WWE stars, where should they go? What should they do?
If you want to do that, go to stcharleswealth.com. I would be more than happy to work with anyone. I am an option-based financial advisor in a lot of cases. What I mean by that is a lot of my clients have options in their portfolios, and it's a tool that I use very frequently if it's appropriate, of course. But visit my website, stcharleswealth.com, to find out more information.
And I say that jokingly, but I would not be surprised if you get an email or two or perhaps a phone call saying, this guy was from here, how dare you say that? Or maybe I too saw Bobo Brazil as a child. I don't know. I would not be surprised if a few of those come your way before the next episode. And Mr. Meatball, if folks want to call you up, maybe to talk options or volatility, or maybe to also debate various WWE legends with you, where should they go? What should they do, sir?
Yeah, I've never went to a WWE event. I went to a ECW event back in the day when they were at...
that's hardcore.
Yeah, and when I went to school in Philly, I went to an ECW match. Saw the Blue Meanie, which was kind of my favorite part of the whole thing in Sabu. Go to optionpit.com. We put out free content by email almost every day. All good volatility-based stuff. Some good trading thoughts for you as well. And go there, give us your email, and we'll go from there.
Stay tuned for his newsletters exploring the origins of all of your favorite WWE stars. OptionPit.com is the place to go. Sign up for that email. And on behalf of the Greasy Meatball and Uncle Mike and indeed myself, thank all of you out there for downloading and streaming and subscribing and sending in your questions and listening live, even if you disagree with us vehemently. And indeed, all the other fun stuff that you do. Remember, you got more coming. Got some great guests joining us, including a guy from RJO over there to get some insight into what's trading on the futures options, boots on the ground side there with all things futures options. Should be fun on TWIFO in a little bit. If you're listening live, we'll pump some fun stuff in between. We'll be back in exactly a half an hour for TWIFO. If you're listening after the fact, then of course click next because you got TWIFO coming up. And then of course you got Vol Views tomorrow, 1 p.m. Central, 2 p.m. Eastern. Then we do it all again on Monday with more of the option.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.